This is back roads of Illinois server to farmers and ranchers in central Illinois in the Midwest. I'm Caesar Delgado. We have a memoriam of Orion Samuelson. He passed away at 91. Orion was a legend farm broadcaster in Chicago and the Midwest. All of our thoughts on his family and friends. Orion Samuelson of 91. The fertilizer markets are looking up at the middle of March, and the planting season is around the corner. Oh boy, this will be fun with Josh Linvill from StoneX Financial Services in the fertilizer division. Josh, look at the fertilizer markets for today's market. We were looking at energy security and fertilizer markets in the Middle East over in the war. One note that the grains markets are down during right now with war and global events. Agriculture is a break-even industry, but farmers are strong enough. This is back roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. The fertilizer markets are looking up at the middle of March, and the planting season is around the corner. Oh boy, this will be fun with Josh Linvill from StoneX Financial Services in the fertilizer division. Hey Josh, how are you with this crazy time for fertilizer?
It has been hectic to say the least. I think about every minute of every day has been packed up, and that includes early mornings and late nights, which I can't complain, right? We're on the front step of application season, planting season, and basically I'm doing the same thing farmers and retailers do every single year this time of year. So I can't complain, but yeah, it's everything going on around the world. It seems to be fertilizer's 15 minutes of fame. So just trying to soak it up all still here because 15 minutes never lasts that long.
Yes, it is a pretty crazy time.
And the longer it
Oh
goes, the
boy,
worse it gets.
this will be fun. Oh boy, this will be fun conversation about this fertilizer markets because of Hormuz and Iran is closed and the planting season is quickly approaching in the Midwest. Man, farmers are concerned about the corn acreage, but what is your position on nitrogen cost?
Um, this is going to come as a shock to everybody listening. Right now, as high as nitrogen prices are, we're some of the cheapest in the world. So obviously, the biggest focus has been on the Middle East and the early days of the war, the early days of the closure. It was really focused just on the lack of shipping and the how many shipping days did we lose. But if we reopen the strait, we can make those up in relative short order. As we moved into the second half of the week, we started to be like, well, wait a minute, what if this keeps going for a little bit? We might start losing some real production and things like that. As we moved into the second week, it's like, okay, now we've lost real production, right? We've got three of the world's top 10 global urea exporters that sit in the Persian Gulf, three of the top 10 anhydrous exporters, one of the top five phosphate exporters, all stuck behind the Strait of Hormuz today. What impact does that have? And we all know it's bullish. But now here we are. We're 2.5 weeks in. We're finishing up the third week of this situation going on. This is starting to branch out. And this is what the media isn't really hitting on just yet. And I think they're going to catch it very, very soon. It's no longer about the fertilizer that flows out of the Persian Gulf. It's about the other inputs. LNG, for example, about half, I think it's a big, big chunk of the world's LNG comes from the Persian Gulf. We always focus on the biggest exporters and what's going on there, but what we don't tend to focus on is the manufacturing rates of some of these bigger countries. India is a great example. A lot of their LNG, a lot of their gas comes from the Persian Gulf, and they are the second biggest manufacturer of urea in the world. They are having to slow drastically down their nitrogen manufacturing in order to save that gas for other things like cooking and stuff like that. So now not only are we losing not only are we losing exports, But we're also losing major manufacturing capability around the world because of the lack of the inputs. Phosphate is no safer. Again, three of the top 10 global anhydrous exports sit behind the Strait of Hormuz. I think what is like half the world's tradable sulfur sits behind the Strait of Hormuz. Guess what your two biggest cost is for phosphate production? It's anhydrous and sulfur. So all this is going on globally. All this is driving prices up substantially. And Lord knows we're not getting any help from the grain markets. But then you sit there and you look at where our prices are. And I know cheap, I got to use quotation time I say cheap. It's not cheap. I know it isn't. Everybody's sitting there saying this is horrible. This is a high price. It is. But normally this time of year, when we look at Middle East economics into the U.S. and NOLA, we're about even money. Our NOLA barges are trading about the same cost structure as that. Um, but also today we're about $100 a ton discount. We are a massive, massive discount to where we should be versus world economics. Phosphate, we are so cheap. We have started to see barges bought up on the river system to be put back into vessels to be re-exported around the world. In fact, there was a report this morning. I haven't even talked to anybody about this yet. There's a report that there was a 40,000 ton cargo of DAP that is being loaded last half April out of Florida sent to India. That's how cheap we are versus the world. So, no, we are not cheap. I fully get it, but we are darn cheap. And that's my bigger worry. We've got more price increases coming.
Do you have any concerns about shortage of fertilizer from the Middle East? This planting season is approaching in the Midwest, Josh.
Yes and no. No, from the standpoint that when you look at it, we produce almost all of the UAN that we need. We produce almost all the anhydrous that we need. So we're nowhere near as reliant on the rest of the world. Yes, our prices are going to ebb and flow because we can't lose exports like we are with phosphate, but we produce most of what we need. Where it worries me is urea. Right now, one of the big reasons why our price is so cheap versus the world is our Q1 import expectations are massive. We had a decent January, but February, March looked to be huge. Well, my issue with this, and this is where I start to get worried, at this big of a discount, these vessels that are expected to come over here, the importing company can easily call that vessel and say, what would you charge me? Stop your vessel, go to India, go to Europe, go to Asia, go to Australia, go somewhere else. Because right now, I don't want to send it to the US. It's the worst market in the world. Go somewhere else. And if that begins to happen, and we wake up one day and we go from, hey, before we wake up, we sit there and think we're great on imports, we're perfectly fine. But also we wake up next morning, it's like, oh, a lot of these imports aren't coming because you got too cheap. We will not have the time to make up that difference. This is the most delicate time of the year for imports. April is our single biggest importing month. And think about it. If you load a vessel right now from, say, the Middle East, nobody dreamed this could be a possibility. So they looked at the price and said, man, I don't want to buy this and hold on to it. And because this thing falls out of bed, I'm going to be stuck holding the cards. And this will ruin my company. I can't do that. So the market has been very delayed. That's my biggest fear. We've adopted a just-in-time demand model more so than usual, and that's fine. That's perfectly okay. But the problem is we get to a final day where that just-in-time demand has to step forward. It's got to pay just-in-time logistics. And not only do we already see global prices, extremely high, and that could bring up the NOLA price up with it, I'm afraid the basis is going to get completely widened out from where it already is. Looking basis being NOLA versus that inland point. I don't think we've seen the worst of it yet.
Of course, it's pretty tricky overall, Josh.
It is. I keep trying to implore with everybody out there. These kinds of times, it's very easy to want to stick our head in the sand and say, I'm not going to even look at it until I absolutely last day have to do something. Please don't do that. Out of all the years, this is the year. Please do not do that. This is the year to have a conversation. This is the year you don't have to commit to it. You don't have to buy it. You don't have to sign a check, but have a conversation. Say, hey guys, here's what my expectation is. I'm going to go 45% corn, 45% beans, 10% wheat. Here's what I think I'm going to need for fertilizer. This is my approach for PK. The more conversations that you have, the more confident they are going to be to have those tons in place. Because right now, if you're not having a conversation with them, and I can't blame them, I don't want to take the price risk in this thing as much as anybody else does. I think the retailer is going to say, well, I'll just wait and do the best I can when they step in the door. The more conversations we can have sooner than later, the more healthy this spring season will be.
What's going on with the planting intention report on nitrogen?
Planting expectations all over. I'll tell you what, we started this fertilizer year. This is way back in June, July. We started with 93 million acres of corn. We just felt like it's a good middle ground number to use. Several weeks ago, before the start of the Iran war, I was ready to push Mike and Quan to raise that number to 95, 96 million. I thought that the 95, 97 million acre corn crop crowd made very compelling arguments. I thought they had a lot of insight, and I agreed with a lot of the things they said. Never did get around to it. I wasn't confident. We weren't close enough to spring yet. But now all of a sudden, when you look at everything going on, the price of these inputs, everything else that's happening in the world market today, all of a sudden 93 is feeling very good in my book. I'd rather keep a more conservative approach, build into it rather than trying to slash demand as we move in. But right now, 93, I'm feeling decent about it.
What is your position on the corn markets with these prices for inputs?
They're too darn low. When I look at the price of it, I mean, here is why I say it's too low. If number one, the story all the way through winter is that, oh, stockpiles are massive. There's just too much of it out there. Yeah, maybe there's too much of it out there versus what our current point of view is. You don't have to rewind the clock very far, and our current stockpiles are incredibly low. So I thought that was a big piece of it. The other side of it is I am worried about the fertilizer component of it. How many acres are going to get planted with a lower than optimal fertilizer application rate? And this might be more of a global thing, right? If these secondary markets start stepping up and needing to buy their tons, what kind of an impact is that going to have on their crop? I am truly concerned if this straight situation continues for a couple of weeks, we are talking about some acres going in the ground with less than full application rates of fertilizer, and that is going to have a yield impact this fall. It may take us a little while this summer to figure it out, but I think there's a certain point in time when everybody's like, oh crap, we didn't get enough on, we're in trouble.
If the port of Hormuz is coming close, nitrogen is not working on the corn acreage for this spring. Where's the fundamentals trends in the market?
That's the thing. I think there's a point in time where the grain markets might start to wake up and realize this fertilizer thing's a real story. If you don't put the fertilizer on, you are limiting the yield potential. Last year, we went into the fall with, oh, it's going to be massive yield, great growing condition, massive yield, and that's going to build stockpiles. Well, if the market starts to figure out here in a few months that we planted the crop and it was less than optimal, that's going to limit it. You got to start pulling down that yield number. I don't care how big the acreage is; it's a much lower number overall, and that's a much bigger impact.
How about the technical aspects on the markets?
When it comes to the grain side, I can't sit there and say I'm the smartest person in the world. I mean, frankly speaking, I pair it with smarter people than me say, and that's going to be Mike and that's going to be Arlen. So I can't say that on the grain situation from a fertilizer perspective. The market doesn't really work that way. We don't have a lot that look at that direction. It's a lot more old school, if you will, relationship driven, points of view, gut feel, stuff like that. So I don't think there's a lot of technical investor types that's driving this thing. And frankly, the scary thing is, I think if they were in the market, you might be looking at prices significantly higher than they already are.
You have some final thoughts about this fertilizer market for today's issues.
Last thought is please take this seriously. I know the fertilizer market has cried wolf so many times, so many years in a row. And I know you get sick and tired of it. You don't pay attention to it, you ignore it. Take this seriously. This is very real situation. I mean, again, you look at just Iran, Qatar, Saudi Arabia. Those three combined for 13.5 million tons urea exports per year. These are very real tons that are missing from the world market. And we already were in a bad shape. This is, if somebody had come to me a month ago and said, Josh, paint me the worst nightmare scenario you can for fertilizer. The only part that we are not living today is if Russia were to shut off their supplies. Literally, I struggle to come up with a worse scenario than where we're at. So take it seriously, have the conversations, be preemptive on this thing.
Thanks, Josh. I enjoyed our conversation, but it's crazy time for right now.
For sure. Hey, anytime. I'm always busy, but man, I'll make time for you. Anytime, just let me know.
Thanks again.
Yes, sir.
This is Josh Linvill from StoneX Financial Services in the Fertilizer Division.